Hello traders, Thirunapan here, founder of Master the Markets Elite Traders Conference and the Traders Open Day. So today we're going to be looking at the 4 market principles and the myth. Okay, so we're going to be looking at all of that. So now the first point is, you're asking yourself, what's the first market principle? Now you see, traders, there are a few principles in the market that actually makes the market move. Okay, this is so critical. I can't explain to you, over the 20,000 traders that we have trained and coached and interacted with, it's like most of them don't know these principles. Now, why are they so important? They're so important in formulating your parameters for your strategy such that it's got a very strong edge, okay? So understanding that and understanding the importance of it, now let me then swiftly move on into the 4 market principles. The first one is to understand who is really a buyer, right? Who is a buyer, right? Now, a buyer is one who basically believes, that the price that he buys at is going to go up further in the future. So he only buys with the belief of price going up further in the future, right? Going up further in the future, right? This is the only reason someone buys it. Now, you may be saying, hey, hang on a minute, but when I go into a store or whatever, I went to go to a shop and I buy an iPhone, I'm not actually thinking whether the price should go up in the future or not, because you see, when you buy a product like that for your own self, for your own use and not as an investment purpose, you're actually buying it for a benefit, right? So when we buy consumer-based products, it's usually like, cooking stuff or like food stuff or like socializing, paying on entertainment, buying stuff like that. That is when we think that that's going to give us a bit more happiness, a short-term happiness usually, or desires. So we're buying out of desires and not really thinking about the up price fluctuations. So in that examples over there, it's just for our own benefit and pleasure. But over here, when it comes to investment kind of stuff, like especially like in trading and all that kind of stuff, usually people only buy it because they're thinking that in the future it's going to go up higher and then they can sell it and then they can get some profit out of it, right? So that's the first point, okay? So a buyer always buys in the market in terms of any investment stuff or trading stuff related, right? In the belief of the price going up in the future. Now, a seller on the other hand, sells something, right? Sells with the belief that it has reached its maximum point, right? That it has reached its maximum point and not going to go any further up, right? Not going to go any further up in the future, right? So that's what we're saying. So on the other hand, a seller is selling something. So basically, you would not hold on to something anymore. You would get off the trade or the position when you start to believe that it has reached its maximum point and it's not going to go any further up. Now, let me give you an example on that, right? So, for example, if we have a chart that's going up like that, it's going up and up and up, and let's say you entered somewhere around here. So when you bought in here with a belief that it's going to go up in the future and you did get it right, but however, at this particular point, you are thinking now that it's probably reached its maximum point. It's not going to go up any further. At that point, you then become a seller. Now, an important point that I must do mention over here also, traders, that you must also remember and carry it forward into your trading style is that, and your trading understanding is that once you buy into a position, the moment you click buy, that very second, traders, you become a seller. Because you've bought it already. Now to only get out of the position, you can only do one thing. It's either sell it. You can do either one of two things really. Either sell it or you can hold on to it. But regardless of what, however long you may hold, finally you might be thinking to sell it if you do want to, right? So once someone buys it, immediately turns into a seller. Especially in like intraday trading, it's like within minutes, right? Within hours, seconds, but within the day, we usually kind of exit the position. So that's the first two things that you must understand. Who is a buyer, who is a seller, and understand these beliefs. Now, let's go on to the next point, right? Now, if you look at these two beliefs over here, right, you can easily see they are opposite to each other. Yeah, they're opposite to each other. So here, he believes that it's going to go up further. Here, they're selling because you think that it's not longer going to go up. So that is what we call the opposing beliefs in the market. The opposing beliefs in the market is what actually makes the market move, okay? It's actually causing market movement. Finally, it's this opposing beliefs that this buyer and seller has that translates into a transaction, right? Into a transaction. Now, when that transaction happens, traders, is when you see that price move by a particular tick, okay? Because if that transaction doesn't happen, then how can actually the order go through the exchange or the foreign exchange market, right? And how can you see then as that being credible and then for the price to move up by a pip or in the indices is by a point or whatever not if you're talking about other kinds of instruments. So, you can understand that these four market principles have got come into place for the market to eventually then move and for price to then move by its smallest increment and so on and so forth. Now, this transaction is happening out of this opposing belief, which we then mentioned over here with the two types of beliefs that the buyers and sellers have. Finally, the myth is what I do want to talk about. Before I come into the myth, now let's just review these four market principles and think, how can it be so important in terms of formulating our strategies? You see, traders, if you can understand this, what you really want to be thinking about, especially if you are a swing trader or a breakout trader, what you really want to be thinking about is where this imbalance occurs, right? Which points in the market where we are having more buying orders coming into the market, where people are more believing that the price is going to go up further, and then we're having the sell orders, not really that many, over that diminishing in the market, where they are not wanting to sell it even more further up. And those points would usually be around over here, right? Let me just highlight them for you guys. So it'll be around here where these opposing beliefs will start to happen. And those are the swing points. And they keep happening again and again, commonly reoccurring again and again in the market, that you can take advantage of. This is why understanding this market dynamics is so critical. And usually these points also happen behind support and resistance points as well, okay? So you need to understand that usually this kind of things, this kind of opposing beliefs where the imbalance occurs, where you can have it behind support resistance points. So that will give you nice clues also how to actually position and write out your parameters out depending on what you want to capture out from the market, okay? Right, the final thing that I do want to mention is the myth. Now, one of the things that you would have seen people actually mention is that at points where the market is going up, there are actually more buyers than sellers, right? And then when it starts to like go down, you see like for example over here it starts to drop a bit, and then you will start to, people here saying such things as like, you know, the traders saying such things as the more sellers than buyers right now, right? So over here you'll be saying something like more buyers than sellers, and here you'll be saying something like sellers more than buyers. Now, traders, that is a myth, okay? That's not true. There's no more buyers than sellers, or in this instance, there's no sellers than buyers. No, it's not true at all. You've got to get very clear when you can understand these four market principles in which price moves. You see, it's the opposing beliefs first that makes the market move, and second, it's the orders in the market that makes the market move. Now, let me explain this, right? For example, you can have, let's say, for example, let's say the owner of a store, owner of a shop which sells like 100,000 units of iPhones, let's say, right? So in that instance, you have only one buyer buying all the 100,000 iPhones, okay? But the sellers can be numerous. Can be 100, can be 1,000, can be 2,000 sellers, right? They can buy it and then they can sell it off, and they will be usually known as the distributors. But the guy who bought it is just only one because he's got the highest capital power, right? And usually, if you were to think about it, actually the 2% only of the population, or even less than maybe 1%, has got 90% of the world's wealth, right? So usually it's a minority amount of people who's got the highest capital power. So that would make sense in saying that usually when the market goes up, doesn't mean there are more buyers than sellers. There could just be one buyer over here, or maybe even 5 buyers, very minimal. But they can be selling off to 1,000, 2,000 sellers, okay? That's one critical point that you have to remember. Because then what's really then happening is that not more buyers and sellers, is more buying orders than selling orders. That's all that's happening, which is making the price move. So I strongly urge you all to really look into these 4 market principles and the myth, and to understand on how the market moves, because these are so critical concepts in which you can use to formulate your parameters and your strategy to have an edge in the market. I believe this has been really good value for you, and as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.